All right. Typical trouble with Twitter this morning. Probably have to decide to figure that out or drop that as a stream. But anyways, happy Thursday. It is September 19th. Hard to believe that's the case. Truck Driver Appreciation Week. I know some people celebrate it more than others based on what I'm seeing and hearing from folks. But anyways, really excited to have Paul Singer here joining us, founder at FleetWorks. Paul, you got connected by an old buddy of mine, Patrick Duffy, and I had a good chat with you. So excited to have you on the show.
Yeah, thanks for having me. Crazy how small the freight world is. Patrick and I got coffee at one of my favorite coffee shops here in New York, probably about 9 months ago, and then kind of leading to this podcast. So you never know how a great coffee is going to lead to a great conversation.
Seriously. And if I know Patrick Duffy, one of the things he really appreciates is a good coffee in the morning. I remember watching him walk into the office every day with something fancy in his hand. But it's too funny. That checks out. Sounds about right. But anyways, yeah. So you guys are doing some cool things over there. But we'd love to learn a little bit more about kind of like, who you are and, what makes you tick. I notice you're a Connecticut kid, I think, born and raised. Is that right?
Yeah, I guess you've really done your research. Although I don't know how growing up in Connecticut kind of helped me where I am today. If anything, I think being in Connecticut probably isn't super well suited for freight, even though I guess XPO was probably about 10 minutes from where I grew up. But, I think I joked about this with a friend the other day that, I think before, after I graduated Yale, I went into management consulting. I spent a lot of my time there focused on the industrials practice, which is sort of how I kind of got my start into manufacturing and then logistics. But I think prior to that, I had probably never given a second thought to warehousing and logistics, right? Like, I think for most people, it's kind of just this invisible thing that continues to operate and exist in the background. Right. I think probably only in 2020 did we all, I think people outside of the industry pick up their head and realize like, oh, wow, like this industry can fall apart. Like it's actually sort of held together with duct tape and shoestring. And one big shock to the system can really just disrupt things. And so, I've kind of felt very fortunate to be a part of this industry for about 6 years now. So after my stint in consulting, really kind of fell in love with industrials, took a role at Uber Freight on their strategy team. So there I worked on a whole bunch of stuff, started with thinking about how Uber was going to change how it tracked trucks. So when I started at Uber Freight, we actually had very little visibility into where our freight was. So
were you there when they acquired Transplace? I worked at Transplace my senior year of college. I'm familiar with the TMS and that's cool. So yeah, sorry to cut you off, but I'm familiar with what you're talking about.
I think that acquisition probably was just a saving grace for Uber Freight, right? And we can kind of get into digital brokerage and kind of what that means, because I think that in some ways is related to what we do. But I think super important for Uber Freight to diversify away from the just digital brokerage and focus more broadly on kind of tech-enabled services. But anyway, all to say, I really spent most of my time at Uber Freight thinking about how we could use technology to expand and manage the relationship with our drivers. So Uber Freight had hundreds of thousands of carriers and over 1 million drivers active in the portfolio. With a team of a few hundred, you can't pick up the phone or email them every single time you have a problem or you want to communicate quality expectations. So we built the first dynamic scorecard in the industry. So we were scorecarding carriers in real time based on their on-time performance, their bounce rate. That program was super successful. We massively changed carrier behavior. But one kind of interesting thing that we learned there that frankly led me to FleetWorks was when carriers got a scorecard, we actually saw that they took more loads with Uber Freight, which is a little bit counterintuitive, right? You tell a carrier, hey, like, here's your score, here's your report card. A lot of people would assume that that's a negative experience. What we actually saw was that by being transparent and fair and being really carrier first in how we communicated, we actually saw that carriers wanted to book more loads with Uber Freight.
Yeah, man. Here are the standards. You may not be meeting them right now, but at least I'm going to let you know exactly where your service is failing and how you can get better.
Exactly.
Yeah. Very cool.
Ultimately, that kind of led us here. So we started Fleetworks about 2 years ago, really with this thesis that digital bookings have sort of hit a ceiling. We've seen this at digital first brokerages, but now a lot of non-digital first brokerages have put a lot of effort into digitization. They have their own private load boards. And I think a lot of folks are butting up against carrier behavior preferences and communication preferences. And like the sticking power of phone calls, emails, text messages, WhatsApp messages, G chats. And, when I talk to industry executives about this, like everyone just kind of nods their head and they're like, yep, like that's how my reps book with their carriers. Like they just WhatsApp their dispatcher at, 123 Express, and that's how we book our freight. That used to be an unsolvable problem, right? You just used to have to WhatsApp people. Now we can use large language models and generative AI to actually build digital booking channels into these previously analog and manual communication channels. So today, what that looks like is today on the phone, when carriers call our customers to book freight, our AI is going to vet the carrier's phone number and MC number through our compliance partnerships. It's going to describe the details of the load, whether it's a simple 2-stop load, a 6-stop multi-stop load, a load with super complex load notes. We're going to describe all the details. We're going to negotiate on price. And soon we'll actually be end-to-end booking carriers on freight. So without a human ever getting involved in that phone call, carriers will be able to book with our freight broker customers through their preferred communication channel. But from our customers' perspective, it goes fully digital. That's exciting in and of itself. But frankly, where we're taking this is, and where we already see our customers finding a lot of value is there's just a huge amount of latent and lost data in all of these carrier sales communications. So whether it's a phone call, an email, so much bid information just gets lost in the ether. We're collecting and structuring all that information and surfacing it back to our customers. And so we're already helping customers get smarter on how they price for the 2025 RFP season, for their spot bids, but also how they price towards carriers and thinking through, do I need to adjust my price up or down in order to increase my odds of coverage? And so we're really focused on helping our customers cover freight as quickly and as cheaply as they can.
Yeah, that is very cool, and I think that you're right when you mentioned that there's a whole bunch of data that seems to slip through the cracks, and what is the value of that data that we're letting slip through the cracks? Where are you seeing with your? Seems like you've had some pretty awesome adoption, early on. Where are the golden nuggets you're finding? Right? Is it on paper? Right? Is it rate cons, PODs, invoices, things like that, or is it more in the the true communication side of things? I think that one of the things that I've been hearing this week, right, is truck drivers saying, why don't you just treat me more fairly 365 days a year than give me a goodie bag 7 days a week and then not pay me my detention when I sit at your facility for 10 hours to pick up.
Totally.
Where are you guys bridging those gaps to make communication more efficient? I know you mentioned the carrier scorecards, which is very cool, but I'd love to dive in a little bit more to where the goods are that you guys are finding.
Yeah, I think there's two really interesting questions in there. It's first of all, how do we treat carriers with respect that they deserve outside of Truck Driver Appreciation Week, which it is. So happy Truck Driver Appreciation Week to all who celebrate. So that's one piece of it. And the other piece is, what kind of data is most valuable for our customers. So I think a lot of people would agree that carriers frequently don't get treated fairly. You mentioned detention. I think that's a great example. I think another example that's so relevant to us and really impacts people a ton in this industry, because like in this industry more than anything else, time is just so valuable, right? 5 minutes here means that you can't spend 5 minutes trying to book freight somewhere else, right? Or an hour stuck in detention means that you're going to run out of your clock at the end of that load, and you're not going to be able to deliver on time, right? So time is just critical in this industry, even if it's not a time critical shipment. What we found with our a lot of our customers is that when carriers would call them on a particular load and say, "Hey, I'm really interested in booking this load," maybe even at the target rate that you've posted out there. What we found is that wait times for carriers calling in could easily exceed 5 minutes on a hot load on a Monday morning, right? And if you think about how frustrating it is to be on hold for 5 minutes, like with your bank or with an airline, and you're like, "Will someone just please pick up the phone and help me with my problems?"
Especially if you know you're the guy that can haul that freight because you've done it
Right.
150 times previously, and you're waiting in a queue with 29 other guys that probably aren't as qualified as you are.
Totally. Yeah. And that's one of the other things that we help our customers do is we help them prioritize across all those carriers. So if you have 20 carriers surge on a super hot load, let's say that's going from Chattanooga to Chicago, and everyone's trying to get back to Chicago on Friday. How do you prioritize those versus just taking the first carrier that you have in hand? Absolutely, that's something that we help our customers prioritize, because we have this sort of macro level view on the market. But I think really kind of most importantly is like right now there's a lot of lose-lose scenarios. Like brokers are not getting in touch with every carrier that wants to talk to them, and carriers who are really well suited to pick up that freight aren't getting connected to the brokers that they want to work with. So we kind of help bridge that gap. And in doing so, I think a lot of people ask, how do truck drivers respond to talking to an AI? I think a devil's advocate would say, truck drivers are old school. They don't want to talk to an AI. They want to talk to a person. I think that is certainly true, and we never get in the way of that. But truck drivers also want to make money, pick up freight, and kind of move their truck, cover their truck faster. And we help them with that. Yeah.
Time problem.
Exactly. And you're also asking about the data. I think when you kind of combine these two things, so we pick up every phone call, we respond to every email, we send out text messages, and most of that data is lost, right? The only data that's captured, to your point, is what comes out on the rate con, what's on the POD, right? There's a whole massive range of sort of what I'll call the order book of carrier bidding data that our customers just don't have the time or energy or bandwidth to be able to constantly log back into their TMSs, right? And so we're structuring that, we're capturing that, we're sending it back to our customers in their TMS, but we're also helping our customers think more broadly around what is my pricing strategy. The reason that that's valuable is, let's say you've got a super tough to cover load. Because of the whole FleetWorks network, and because we're handling tens of thousands of loads every single day, we can actually give our customers a pre-read on where the market will be based on what we've been handling over the last couple of hours, right? So our data is real time. If one of our customers is trying to cover a load from Atlanta to Chicago, and for some reason it's a little bit harder than usual, we can alert the next customer if they're trying to cover that load in a couple of hours, saying, "Hey, this might be harder to cover than you expect," or vice versa, right? This might be easier to cover than you expect. Maybe rethink your pricing strategy in both directions. It works really well in this industry because it's so fragmented, and we just help, like the FleetWorks network, as it grows, we start to get these amazing marketplace effects where everyone gets to benefit from each other's data without exposing anything sensitive about it. So we aggregate this data and we anonymize it. And in doing so, we've already seen our customers rethink how they go to market for 2025, rethink how they bid on spot freight. but also start to put feelers out there in the market and understand what is the true price that a carrier wants for this lane, right? Because especially if it's a new lane and you don't have a lot of developed relationships, you need to do a lot of research and digging. And we basically help our customers do that research.
Yeah, that it reminds me a lot of, like, I don't know, what goes on in the airline industry, or like the Airline Tariffs Publishing Corporation, which allows that information to flow freely so that American Airlines can see what the competition is selling a seat for. There's no blood loss there. There's nothing shared that's an issue, but it allows a world where guys like you and I, or I don't know, maybe you're what are the airlines flying out of JFK? You're not a Blue. What is the JetBlue? Are you JetBlue?
Big JetBlue guy. Yeah, they easy to pick up, free snacks. I love that they just have a fridge and you can just go get the snacks whenever you want. Saves everyone a bunch of time.
Right. Anyways, like the price transparency, I guess, to get back to it in the airline industry is much higher, right? Which allows that those people to buy seats, and get on planes and be moved a lot more quickly, a lot more efficiently. So yeah, I mean, I think the more that you can eliminate that time friction, in a freight transaction, the better it is for everybody, right?
Yeah. How do you guys think about it at Farelanes? Like, you guys are helping your customers rethink their pricing strategy. Like, I guess where have you guys seen success, and like where do you see the gaps today?
Yes. So Fairlanes is just getting our rate data from a different source than what the other kind of more traditional rate providers are using, right? I think market makers share rates with those guys. It's self-reported. We were thinking it might be a more true real-time representation of market rates if there is a way to start using factor purchase carrier invoices as our source of truth for rates, right? It's a great benchmark, and I think that what we've seen is more true reflection of when a market moves. I think one cool example I continue to kind of go back to is one of our more recent users is a lady named April Monroe. She runs a brokerage for Proficient Auto Logistics, but she's getting her foot in the door with a new customer running the brokerage. Ran a couple of loads, first 2 loads, familiar with the lanes. She made 50 or $100, and then she goes to price a reefer from McAllen to Dallas, Texas. She doesn't know what that's paying. So she goes to DAT. DAT tells her it's $280 a mile. When she goes to buy the truck, it ends up being $1,650 and closer to like $325 a mile. She lost $200 on the load, and now she's in the hole with the customer because of maybe a lag in data on the other source that she was looking at. So we pulled up Fairlanes, and we had 50 or 100 load records in the last 30 days showing that rate per mile at like $324 and closer to $16.5 that she had to pay for the load. So I mean, I think that there's just some lag when a lot of the data going into these other rate providers are coming from brokers, and when brokers pay the invoice is just later than when the carrier gets paid by the factor a lot of times. So if we could start tying rates to like when the wheels were up on the truck as opposed to when the truck was paid, I think it just helps kind of eliminate some of that friction and those big swings that we see when markets get hot or cool down in freight.
Yeah. I think there's also this problem of like self-reported data, right? Like people are like choosing to send their data. So with us, there's sort of there's no choice for better or for worse, which means that our customers actually get a real-time view, and they see like all of the available data. And so, I think when interesting anecdote here, like when I was working with Ryder's head of pricing and analytics, like super, super smart guy and responsible for a lot of the success there. We started digging into Ryder's specific data that we were capturing for them. When he looked at the data that we had structured for them, he was like, "Oh wow, like this changes how I think about pricing in real time, like to the order of 10 to 20% on a given lane." So for some of their most popular lanes, we already had hundreds of data points where previously they only had like 10 data points.
Right.
They only had the booking data, but we said, hey, for every 10 bookings, you actually got 10 bids. That's super interesting because you might want to rethink, okay, should I price a little bit lower to capture more loads from my customer, and in turn kind of pass on that volume to the carrier? And that's kind of how I think this is a really a win-win for the marketplace. From a brokerage perspective, I think the brokerage of the future is going to just look so radically different.
High velocity,
Yeah,
low margin, right? Just don't lose money buying the truck.
exactly. I think the odds of you losing money are going to go down. I think the ability for a single broker to manage so many more relationships and so many more loads using AI as a co-pilot is going to be massive. And then from a carrier point of view, carriers want their trucks filled. And there's a famous stat that 20 to 30% of miles are driven empty, right? And that's a huge driver of carrier losses and carrier bankruptcy. And certainly over the last 24 months, we've seen, I think, a lot of carriers really struggle in this market.
Right.
AI does a really good job at making decisions and structuring data, and then making decisions based on that data, right? Versus, I think for people to do that, certainly they can, but it's just a lot of time and energy to continue to email your favorite carriers or text them, and things fall through the cracks all the time, which is so understandable. And so with an AI kind of putting these loads in front of carriers saying, hey, this is the perfect load for you based on everything that you've told us before, based on where you like to run in the past. And again, we're pulling data from a bunch of different sources, and we've got some amazing partners that help us sort of get in front of carriers in the right way at the right time. We can say, hey, here's the perfect load for you, and in doing so, we help brokers lower their costs, but we also help carriers fill their trucks, right? And that's like a great trade-off for this industry. If you think about just from a pure economic standpoint, it's amazing. But then also think about the greenhouse gas emissions of this industry, right? And 1% of global greenhouse gas emissions are deadhead miles in the US. Like, that's an insane stat. 1% of all greenhouse gas emissions are deadhead miles, right? And if you can just cut that by a couple percentage points, you can just radically change like the trajectory of the human race and the trajectory of this planet. So I think we're really excited about this ability to help our customers grow and help our customers price. But we also really think Fleetworks is helping our customers actually make a positive impact in the world. And a lot of our customers now have targets around this, and that's certainly something that we are helping them with too.
Yeah. Super duper interesting stuff. It's a wild, crazy world. It's a great time to be in freight tech. I mean, it's kind of one of these final frontiers where, kind of making a big jump, I think, is certainly something that is imminent and something that, kind of needs to happen to get us to a place where, we're utilizing the assets on the road to the fullest extent of their capabilities, and it'll just make things easier for everybody, right? It's not just the assets with wheels, right? I mean, it's everything in supply chain and logistics and warehousing. So yeah, I mean, I don't know how you get your hands on all that data without a great AI helping you figure out what the insights and implications are for your business. But the more freight we can put on trucks, right, the less empty miles guys have to haul, the less time that people have to spend waiting at docs, the better. And AI certainly, I think, like this helps folks get there. Do the truckers know that they're being communicated with an AI?
Yeah.
Or have you gotten any feedback from them? Is it? I mean, it's possible it's better communication than you get from some reps, especially at like 4:30 on a Friday afternoon when
For
everybody's
sure.
kind of
Yeah.
in the office.
Yeah.
Do you have anything on that end to speak
Yeah.
to how the carriers are responding to this type of communication? They're happy with it?
Yeah, it's a great question. I think this product only works if carriers like interacting with it. And so we definitely have some really interesting data there. So 30% of our call-ins are per customer are from carriers that have previously called that customer. So what we see is carriers call our customer about load 123, and then a couple days later they call them back on load 456. In both situations, our AI is picking up the phone. Generally, what we see is carriers do not recognize that they're talking to an AI. We've put a huge amount of effort into not only just emulating the lingo, but also the speech style of a carrier rep. And so there's a lot of research went into how can we make this experience as comfortable for the carrier as possible. Now, that being said, we do put a lot of control and customization into our customers' hands. So our customers can really define like basically the rules of the game, and they can decide. I want the AI to say that it's an AI at the beginning of the call. So we do that for some customers. Some customers say, I just want this to be as seamless and as human like as possible, and I'm gonna do that. So at no point do we ever try to fool the carrier. And we've certainly gotten questions from carriers saying, "Oh, are you a person or are you an automated system?" We always tell them that we're an automated system because we just don't believe that we should be trying to trick carriers. But
Right.
we do think that carriers should be able to call our customers and expect like effectively what a great rep would sound like, and how they would communicate.
Right. Yeah. It's a huge problem. Now
Yeah.
that kind of talk about it a little bit, is like like a student to teacher ratio, right? If you think about it in terms of like schools,
Mm.
you know, carriers to broker ratio is something that impede your ability to like utilize the carriers to the fullest extent of their capabilities or
Yeah.
things of that nature. So yeah, it's very cool stuff that you guys are doing. It's really funny that you were studying how carrier reps talk with carriers. You have any? It'd be cool to see that in action. I don't know if you have anything, and I don't want to put you on.
Yeah, we can run a live call. One thing worth mentioning, we actually had a call. I remember our operations team flagged this call to me a couple weeks ago. This was a call at 11 p.m. Eastern. This carrier called in. He sounded pretty tired, and he was like, we asked him for his MC. We're like, cool, you're set up with us. Looks good. What load are you calling about? And first thing he said was, I can't believe you guys are still in the office right now. Like usually when I call you guys, like no one picks up after 4:30. And the AI responded. I think this is the power of AI. Is like this is a whole new situation that we didn't like program it into the bot. And it said like, yep, like we're available 24/7. Happy to help. What loads are you interested in? And sort of the conversation flowed smoothly from there.
Hell yeah.
But yeah, let's dial out this number and we'll kind of give you guys a live taste.
Very cool. Is there anything you want to present, or is this just audio?
We can just go with audio for now.
Sweet.
Yeah.
This is Echo. Can I get your MC?
Can you hear that okay? Yeah. Hey, how's it going?
Yes, I can hear you. Could you please provide your MC number? Yes, I can hear you. Can you provide your MC number?
My MC is 1, 2, 3, 4, 5, 6.
Okay, looking it up. I'm sorry, I couldn't find that MC number. Can you please repeat it?
Yeah, can you give me a sec? I wanna find my MC.
Sure. Take your time.
My MC is 885529.
Okay, looking it up. Robert Rush Trucking.
Yes, sir. That's me.
Do you see a reference number for that load?
No, I don't see a reference number here. Sorry.
No problem. What's the lane?
Lane is Marshall, Texas to Tyler, Texas.
Let me pull it up. It picked up in Marshall, Texas on October 3rd between 3 a.m. and 10 a.m. It drops off in Tyler, Texas on October 5th between 3:30 a.m. and 10 a.m. You need a 53-piece van. It's 42,000 pounds of pine cone shavings. I'm asking for $342 on this one. Would you like to book?
342 is way too low. Can you go any higher on that?
What rate are you looking?
I'm looking to be around 500 on this one.
I will have to check. Hold on. You come a bit closer to the load board rate.
Yeah, maybe could you do 450?
Okay, let me ask. Hold on. I just spoke to my boss and got approval for $370 for this one.
370?
Does that work for you? Yes, $370. Does that work?
No, I'm gonna have to go 400 is my lowest.
Let me ask. Hold on for a second. I can't do 400, but I'll note it down and call you back if my manager approves it. Can I get your name and extension?
Yeah, my name is Paul. The extension is 123.
Got it, Paul. By the way, are you running any other trucks today?
Nope, just that one.
All right, I'll call you back if we can work with that rate. All right, I'll call you.
Nice. So pretty typical call there. I think you heard a lot of really interesting stuff, like vetting the carrier's MC, searching for a load, describing the details, negotiation, and kind of like what that experience looks like for the carrier. And we do a lot of like number crunching on the back end on our side. Sometimes a human can jump in and provide input to the AI if our customer is set up with us that way. But yeah, and then broadly, if everything looks good with that carrier and they agree to that rate of, I think it was 370, that carrier would just get booked on that load, assuming then we do a bunch of checks around when and where the carrier is empty, making sure that the email is good so that we're not sending loads to any fraudulent carriers, and then reconfirming all the load details. And in that case, the carrier was willing to go down to 400 and that was it. And then, the ball goes to our customers and they can say, actually 400 is good enough on this load and we'll call them back.
Wow. That's so cool. That's unbelievable.
Thanks.
Yeah, I don't even know what to ask. It's very cool. What have you guys built that on? You have your own LLM, or are you using one of the OpenAIs or something like that to build this out?
Yeah. So the whole stack, like across the board, is proprietary. Just because, like you heard there, like the voice. I don't. You've been to freight brokerages. You know what it sounds like. It's like the voice is broker oriented. The way that we transcribe these calls, we have to be able to accommodate all the lingo. And then the LLM has to be highly performant to be able to sound natural on a call, right? So that you don't have like a 10-second lag. We've seen, I think, if you maybe try to spin something up like this out of the box, you're gonna encounter a lot of issues with performance, and also kind of the ability to interpret different ways of carrier communication. So we spent a lot of time really just fine tuning this to this exact use case, which is really kind of the superpower here. And then, really kind of where we see that going is, we take FleetWorks on the phone and go to FleetWorks on the email and FleetWorks on text message and FleetWorks on GChat. And suddenly carriers are booking the majority of their freight through AI, and same with our customers. We kind of see a world where instead of AI providing input to people for how people should do their work, people will provide input to the FleetWorks AI to drive how it does work. And so one broker on FleetWorks over time will be able to manage 100 loads a day, right? Versus today, best in class brokers, the best of the best, maybe 20 loads a day, right? And that's really where we see this product going over the next couple of years.
Right. Makes a lot of sense. Margins have gone down in brokerage, right? It's no secret. We were investment banking guys are talking about it at this TIA event I was at a couple of weeks ago. The Stevens investment banking dudes from Northwest Arkansas. I know they cover this space pretty extensively, and how do you get margins back to where they were so that liquidity could start flowing again? You got to cut headcount, right? You got to get your overhead down a little bit. You got to be able to operate a little bit more efficiently, and surface those human to human decision making points with as much information and data as possible to give yourself an opportunity to not lose money on the load, whether you are the broker or the carrier, because that's the win-win that everybody's kind of looking for, right? So it's very cool stuff. What are the next steps to get this thing from voice, like technologically, to text? How does that, seems like, voice might be harder to work with than digital, right? So you did the hard part first. Am I understanding that correctly?
Yeah, I think we did do one of the harder parts first. But we feel really great about that decision, because phone calls, while, probably about a quarter of, it really depends on how the customer is organized, but regardless, phone calls take up just a disproportionate amount of time for our customers. And it's such a big pain point when the phones get blown up on both the broker and the carrier side. Like, nobody's happy with that outcome. So we're really happy about how we've solved that problem today. As far as kind of where we take this from here, a lot of stuff is already in the works on email, SMS, GChat, WhatsApp, all those different ways that the carriers are working with their like favorite broker. And ultimately that's kind of like what is really kind of important about what we're doing here. It's that we help our customers make all their channels go digital. And we're already in conversation with a lot of the, I would say, more digital first brokerages, because as someone who worked very deeply on Uber Freight's app and I'm incredibly proud of the work that the team did. I think there are some limits to like true digital bookings, right? One of the biggest things is that you're often a carrier's last choice when it comes to a digital load board, right? They're going to talk to all their relationship brokers. They're going to call up their boy. They're going to email their guy. And then they're going to go to the digital load board and poke around for a lot of carriers. And so now, and it used to be kind of this trade-off of, okay, I can go with email, but so that's less efficient, but maybe I can get better margin that way. Now with FleetWorks, that trade-off isn't the same anymore. Like, the phone is now a digital booking channel. And so you can find that margin that you were previously getting on the phone while still increasing the percent of books that are digital. And so that's a really powerful proposition for companies like Uber Freight, for example, who is really, really focused on how do we digitize bookings, and the whole operation is built around automation first. So in some ways, digital brokers are actually a great customer for this product, because they're already set up to digitize everything, but still have to rely a lot on these manual communications, because ultimately you've got to get your loads covered for your customers.
Right. Absolutely. One thing that we talked about a couple months ago, maybe now is, I mean, market's got to swing positively here at some point, right? We've been in the doldrums for probably way too long.
Yeah.
When it does, how many carrier reps do these brokers have on their desk that have dealt with a hot market, right? I mean, I think it's pretty easy to get a truck these days relative to, the post-pandemic crazy times that we saw. I mean, I think a tool like this really kind of enables you to be able to likely handle that communication, that conversation, whether the market's hot or not hot. I mean, it may even help you be able to train the carrier reps that you do have to understand how to negotiate and have these conversations when they do need to be had person to person.
Yeah, I think it's a great question, and it kind of leads into what does the brokerage of the future really look like? I think, previously it was every 10 loads that you got from a customer, you had to bring on another rep, right? And so we're helping our customers think about, okay, nobody is at this point, I think, like laying off people. I think a lot of that had happened, let's say at the top of this year or late last year. But I think hiring slows down a lot for our customers as they kind of realize, like companies like ours, but also like tons of other companies that have sprung up in like adjacent spaces, like automated quoting for customer emails and things like that. And like the power of like track and trace tools has only gotten better over the last few years. But I think they start to see that my operators can actually handle more freight. And when we launched this as an A/B experiment at Ryder, so we gave half the team FleetWorks and half the team didn't get FleetWorks. What we saw almost immediately, the team with FleetWorks was actually just booking 30% more freight than the team without FleetWorks. So the load volume just shifted radically. And that's because so you can imagine if we're block and tackling all your calls for you and you only need to take one call instead of 10, huge amount of time savings. What we also found with the operators who are really like in the weeds in the day to day was we found that they actually reported much higher levels of job satisfaction because we took away all the really like grind and really tedious work off their plate so that they could focus more on relationship building and network building, which for them was like much more interesting and valuable work. And it helped the brokerage as well, right? It wasn't just good for the operators. So we're kind of creating this sort of win-win-win across the brokerage is getting more data. Their people are more effective. The people boots on the ground are dealing with less tedious work and are feeling more satisfied. Carriers are getting their questions answered and booking freight faster and filling their trucks more effectively. And ultimately kind of this network continues to spin this flywheel of, more data leads to more accurate bookings, leads to happier carriers, leads to more effective operators. And so that's kind of where we see the brokerage of the future is reps essentially putting their relationships into FleetWorks and letting FleetWorks handle the majority of the communication with those relationships. So we're going to reach out to that one dispatcher every single time saying, hey man, we've got this load that you like. It's Monday. We've got 2 van loads for you going, from Dallas to Indianapolis, right? That's the lane that you like to run. Just text me back if you're good. If they say, yeah, I'm good to book it. Same price as last time is all good. Boom. We reach into the TMS. We assign that carrier. The rate con gets sent. And so suddenly a huge part of this brokerage is running on autopilot. And previously, like someone had to get into the office at 7 a.m. and fire off 100 text messages to all of their relationships to try to get their freight covered. Now, instead of 100 text messages, it's maybe 5 or 10. And those are just going to be much more meaningful and more about kind of building that personal relationship with the carrier.
Right, exactly. Solving a problem or, finding some value where.
Exactly. Yeah. People are so good at like resolving really complex problems, right? And helping, like, let's say the carrier's like, I can't check into the warehouse. I don't have the right pickup number, or they're not unloading me. We free up operator time to actually go out and service their enterprise shippers, service their SMB shippers, but also service their carrier customers as well. So that, hey, like instead of being inundated with booking my freight, I can actually just manage the freight that's live and help my carriers have a great experience with our company. So that's really kind of a big part of our goal, is free up time to do much more complex, much more interesting work. And we take a lot of the, just tedious and kind of repetitive work off of their plate.
Right. Like, yeah, do the minutia, like cover your tracks so you can go grow the business. It's interesting. We had a conversation with Omar Singh recently, and Omar is the president of Surge Transportation. They grew a little bit too quickly, and the service levels dropped. And before he knew it, right, he had to file bankruptcy. He's battled his way out of it, which is, really yeoman's work on his part. And he's learned a lot. I learned a lot from him in that conversation. But they were, you can get lost growing the business, not being able to service the customers that you do have because you're busy onboarding new ones, et cetera, et cetera. And you may miss the fine print, and you may miss the complaints from the drivers that give you the heads up that, your service levels are dropping on this specific lane with this customer. It seems like a great tool. And I've been thinking, similarly, like what is the future of brokerage look like? I think, one side of the coin is certainly kind of the high velocity, lower margin, more efficient, brokerage that we're talking about here. And then I'm wondering if there is, is there a niche broker that still is able to survive? Somebody with some expertise in a specific, niche market. You think about travel agency, right? There's still travel agents that'll help you if you need to book a wedding anniversary trip through Europe or something like that. They still got some expertise that they can provide. How could a small broker who wants to kind of build his own book of business, do you think that they'll be able to, leverage these types of technologies to, have some, smaller shops as well as maybe some of these, more larger, more efficient shops?
Yeah, it's a great question. So, I actually don't know. I think for a lot of our customers, they're not necessarily like high velocity, low margin. We actually have a lot of customers who are doing a little bit more high touch freight. I think freight that's maybe better suited for cradle to grave. And so we have a lot of customers on the split model who have, dedicated capacity teams.
Right.
We have customers who are cradle to grave, very, very high touch. The product works for both. I think to your earlier point, Casey, this kind of product lets people actually go out and service that high touch, that niche freight. Because again, even if you're doing that, there's still a bunch of manual work that goes into covering that freight and finding the right carrier for that freight, right? And then getting back in touch with that carrier and developing that relationship and keeping them engaged with your company. So we know that I think the market's going to shift like every 3 to 6 months. Now that shippers have moved from a lot of annual bids to mini bids, quarterly bids, biannual bids, we start to see, I think the carrier market is becoming more liquid and more dynamic than it has ever been. And so carriers' lane preferences are changing more frequently than ever. It's going to be harder for a person to have, those 50 Post-it notes on their desk saying, okay, carrier one likes to run Atlanta to Chicago, and they also like to run, Jacksonville to Dallas, right? In 3 months, that data is useless. It used to be that lanes would stay more consistent. So, right. So I think what we see here is like there is less of a limit on like niche versus what I'll call more commoditized freight. And it's more about like kind of the embrace of using the technology. I think what we've seen is with our customers, the more that they commit to it, the faster the flywheel spins for them. I think dipping your toe in this tech can be a great way to start. But for folks who don't fully commit to the business, like it comes down to the change management at the end of the day. If you're not kind of running a lot of the business through this AI platform, you don't see as many of the benefits.
Right. You lose the forest for the trees at that point, right?
Yeah, exactly. Yeah, it'd be like, it'd be like using Farelanes on like one lane of data and then not like 100 lanes of data and saying like, I don't really see the value of Farelanes. And you might say, well, you haven't tried it on your 99 other lanes. Let's do that first before we make a decision.
Right. Exactly. It's very interesting. I had something to piggyback off of that, but it's kind of escaped me.
Well, I can keep blabbering, so don't maybe we'll come back to you. Yeah.
But I'm sorry, go ahead.
No, yeah, I was just gonna say I think we're sort of at an interesting point of where I don't know. I'm curious for you guys. Are you guys seeing I think a lot of people are really hoping for this big shift in the market to come.
Right.
It hasn't materialized yet. I've seen some people saying, maybe this is the new normal, and maybe like we all kind of need to readjust to this change. And this is
Right.
I saw Josh Allen from ITS Logistics. He posted, "Hey, like potentially this is a new normal, and let's stop hoping for a turnaround. Let's actually just embrace this change in the market and figure out how to run the business in this environment." You guys see a lot of pricing data. You guys see a lot of volume data on your side.
Good question.
What's the preview?
Yes. So I think there's two sides. Like if the market doesn't swing, it would be the first time that it's never happened, right? Like things rebound in this industry, and that's because there's a lot of fat in the way that the industry operates, right? It can take a little while before the market to understand, okay, things have swung because of lags of data or silos of data, right? Where this stuff just doesn't get to the screens of folks, right? Because they got sticky notes on their desk, which is telling them that the capacity runs these lanes, but that's 3 months old, right? And they don't know that capacity has become maybe more elastic, more open to running other lanes. So to that point, like what we want technology to do for freight is eliminate the crazy swings in price action, right? Essentially, at the end of the day, the shipper, the hardest thing for them to predict, for earnings reports is variability of their transportation and logistics costs, right? You can't go from spending $1 billion 1 year on transportation and logistics to spending, a couple $100 million the next year and like have any type of degree of certainty what it's going to cost you the following year, right? So like we kind of create this environment where the broker and the shipper and the carrier, they all kind of hate each other to some extent, or at least that's how it seems from the outside looking in. It's your fault, it's your fault, it's your fault. But maybe you're right. Like the more that we can use technology to match freight with assets, right? Asset utilization, the less that things are going to swing super drastically, the less that people are going to buy a whole bunch more trucks when they probably shouldn't have bought a whole bunch more trucks because, the market's due for a cool down, right? And then we had these super exaggerated swings that nobody wants at the end of the day. It causes capacity to have to leave the market. And the shippers, because they were paying $20,000 for a container from China to the West Coast a couple of years ago, a lot of them are just gonna drive the market into the ground and try and claw back as much of that money as possible. So maybe, these new technologies that are coming out, it seems like there is kind of like a freight tech 2.0 wave happening where people aren't trying to like necessarily boil the ocean anymore, create the totally automated digital brokerage, we're starting to realize that, where things can become more efficient, and maybe with tools like yours, this is more of a new normal. We won't have the super violent swings one way or the other, and it creates a more sustainable model for buyers and sellers in the industry.
Yeah, that is such an interesting perspective. Yeah, I haven't spent a lot of time thinking about how this technology could impact market volatility. I think when you have a marketplace as fragmented as US over the road trucking, where you have every actor, in the space sort of acting in an uncoordinated way. I think this is like almost going back to like core, like super low level econ theory. Like when you have all these actors sort of acting in their own best interest without taking into account what everyone else is doing, you start to have like, crazy boom and bust cycles. I actually think that it's bad, but also on the flip side, we don't want people colluding, right, and coordinating, right, because that's actually even worse. But I certainly think what we're doing in the space is we are really building this kind of meta network, this Fleetworks meta network of data, of real-time movements, of carrier demand. And in doing so, we can kind of help our customers think about, okay, here's kind of where this huge monolithic Titanic market, here's how it's kind of shifting over time, and help them kind of get a little bit of a pre-read, a week ahead, as opposed to, looking back on like, data that might be 90 days old, right? And so I think that that's a really interesting perspective that you just brought, where it's like maybe a meta network is the thing that slows down the severity of the boom and bust cycles in this industry.
Information, communication, the more we know, everybody knows, right? It's like, we just share this stuff. It's not proprietary.
Yeah.
But we don't know if we ever had the technology to be able to do so. So I don't know. That's my inkling anyways.
I love it. Spread the gospel. It's a great idea.
Say again, I mean, great time to be in the industry, right? Nobody knows how massive it is until they really get into it, get their hands on it, right? I'm sure when you first started studying economics at Yale, you didn't appreciate the size of this industry.
For sure.
How cool it is.
Yep, totally. Yeah, well, thank you again for having me. It was a great conversation. You give me a lot to think about, so I think I need to like go take a walk and be like, wow, Casey just opened my mind to some new ideas in freight.
Well, you certainly really appreciate it. Intellectually curious people are really intriguing to me, and I think that you're certainly one of those. So I really appreciate you coming on and answering my questions and chopping it up. Yeah, man, anything we can do to make folks' lives a little bit easier in the world of freight, I'm all for.
Yeah, so. Me too. Well, again, thank you again for having me. Kevin, if you're watching, sorry you couldn't make it, but we'll catch up soon.
Perfect. Yeah. All right, Paul. Talk soon.
Thanks, Casey. Bye.
See you, everybody.